What if the biggest mistake investors make isn't picking the wrong stock, but believing the perfect moment to invest actually exists? Every year, millions of people sit on the sidelines waiting for the market to feel safe. They promise themselves they'll invest after the next crash, after the next election, after the next headline. But while they're waiting for certainty, something far more valuable quietly slips away: time. And once time is gone, no amount of intelligence can buy it back. The surprising truth is that the market doesn't reward the people who make the smartest predictions. It rewards the people who understand something much deeper about fear, patience, and human psychology. That's exactly what you'll discover today. You'll learn why so many intelligent people lose money even when they're right about the economy, why emotional timing feels safe but often becomes the most expensive decision you'll ever make, and why the world's most successful long-term investors think in a way that most people never do. As we move forward, you'll begin to notice invisible mental traps that have probably influenced your own financial decisions without you even realizing it. And each lesson builds on the last, leading to one final realization that changes the way you look at investing forever. The final chapter contains the most powerful insight of all, because it isn't just about money. It changes how you think about opportunity, patience, and success itself. If you leave before that moment, you'll miss the one idea that connects everything you've learned. So if you're ready to stop chasing perfect timing and start thinking differently than the crowd, stay with me until the very end. And if this journey challenges the way you see investing, take a second to like this video, share it with someone who's still waiting for the right time, subscribe for more psychology-driven insights, and tell me in the comments, what's one financial decision you've delayed because you were waiting for certainty? Chapter 1. The dangerous lie behind perfect market timing. Imagine standing on the edge of a beach watching the waves. You tell yourself you'll step into the water only when the ocean becomes completely calm. Minutes pass, then hours. But the waves never stop. The stock market works the same way. Yet millions of people spend years waiting for the perfect moment to invest, believing that one day uncertainty will disappear. They imagine a future where every headline is positive, every expert agrees, and every risk has faded away. That day never comes. The first illusion you must break is the belief that successful investing begins with perfect timing. It doesn't. It begins with accepting uncertainty. This is where most people take the wrong path. Their decisions are not guided by logic. They are guided by emotion disguised as caution. When markets rise, they become afraid they have already missed the opportunity. When markets fall, they become afraid prices will fall even further. In both situations, fear quietly takes control. Notice the pattern. When prices are high, people say, "I'll wait for a correction." When prices finally drop, they say, "I'll wait until things feel safer." The goalpost keeps moving. The decision never arrives. Think about driving through thick fog. You cannot see 20 miles ahead. Sometimes you can't even see 100 feet. Yet you don't stop the car and wait for the fog to disappear. You drive carefully. You trust the road. You continue moving because you know that every mile forward reveals the next. Life works that way. Investing works that way too. The strange part is that our brains hate uncertainty. Thousands of years ago, uncertainty often meant danger. Today, that same survival instinct whispers that waiting feels safer than acting. But the modern financial world rewards behavior that often feels uncomfortable. This creates a powerful psychological trap. People believe they are protecting themselves by waiting. In reality, they are paying an invisible price. Every month spent waiting is a month where money isn't working. Every year spent waiting is a year that can never be recovered. Time quietly compounds. So does hesitation. And most people never notice which one is growing faster. The market doesn't require perfect predictions. It doesn't ask you to know what next month will look like. It simply rewards those who remain committed long enough for time to do what emotion never can. This changes everything. Because the real question isn't, when is the perfect time to invest? The better question is, how much is waiting already costing me? That single shift transforms the entire conversation. You stop trying to predict every movement. You stop chasing certainty. You stop believing tomorrow will finally provide the perfect signal. Instead, you begin building something much more valuable, a mindset that remains steady while everyone else reacts. And once you understand why patience creates an advantage that prediction never will, you'll never look at market timing the same way again. Because that's where the next realization changes everything. Chapter 2. Why patience outperforms prediction. Every time, picture two investors standing at the same starting line. The first spends every morning searching for clues. He studies headlines, watches financial news for hours, and waits for experts to tell him when the next big move is coming. He believes that if he gathers enough information, he can finally predict the perfect moment to act. The second investor does something that seems almost too simple. He keeps investing, month after month, year after year. He doesn't pretend to know what the market will do tomorrow. He doesn't chase excitement. He doesn't panic when prices fall. Instead, he follows a process that stays the same, even when everything around him changes. Now ask yourself, which investor seems smarter? Most people would choose the first one. After all, more information should lead to better decisions. At least, that's what we tell ourselves. But the human mind has a hidden weakness. It mistakes activity for progress. The more we analyze, the more productive we feel. The more predictions we make, the more control we believe we have. Yet control is often an illusion. Imagine planting a tree. You don't dig it up every week to check if the roots are growing. You don't replace it every month because another tree looks more promising. You water it, you protect it. Then you give it something that cannot be rushed. Time. Investing follows the same principle. Growth happens quietly. Not in dramatic moments, but in long stretches of consistency that most people find too boring to appreciate. That's why patience feels so difficult. Your brain craves action. It wants immediate results. It wants proof that you're making the right decision. But the market rarely rewards emotional urgency. Instead, it rewards discipline. This is why some of the greatest opportunities appear during moments that feel the most uncomfortable. When everyone else is reacting, disciplined investors are simply following their plan, not because they know the future, because they know themselves. They understand that their greatest enemy isn't the market. It's the impulse to abandon a good strategy the moment fear or excitement takes over. That realization changes everything. Success stops becoming a prediction game. It becomes a behavior game. The focus shifts from asking, "What will the market do next?" to asking, "Will I stay committed no matter what the market does next?" That question is far more powerful because markets will always surprise you. There will always be unexpected headlines, unexpected crashes, unexpected rallies. But consistency has a remarkable advantage. It doesn't depend on being right every time. It depends on showing up again and again, long after excitement has disappeared. The crowd searches for certainty. The disciplined investor builds conviction. And over the years, that small difference grows into something extraordinary. Because wealth isn't usually created by one brilliant prediction. It's created by hundreds of ordinary decisions repeated with extraordinary patience. But patience alone isn't the full story. There's another force working silently in the background, one so powerful that most people completely overlook it. And once you understand it, you'll realize why staying invested can accomplish what perfect timing never could. Chapter 3. The hidden power of staying invested. Through uncertainty. Imagine climbing a mountain on a cold, foggy morning. You can't see the summit. You don't know exactly how many turns are left. Some moments make you wonder if you're even moving in the right direction. But every experienced climber understands one simple truth. The mountain doesn't reward the person who stares at the peak. It rewards the person who keeps climbing. Investing follows the same principle. Most people believe wealth is built during the exciting moments, the massive rallies, the record-breaking gains, or the headlines everyone talks about. But the greatest progress often happens when nothing seems to be happening at all. That's the hidden power of staying invested. The market has always moved in cycles. There are seasons of confidence, seasons of fear, seasons when everything feels unstoppable, and seasons when it feels like the entire system is falling apart. The problem is that our emotions treat temporary seasons as permanent realities. When prices rise, confidence whispers, "This will last forever." When prices fall, fear whispers the exact opposite. Neither voice is telling the truth. Because markets change. They always have, and they always will. Think about the changing weather. A storm can make the sky look permanent. Dark clouds can cover everything you see. But no one believes the sun has disappeared forever. They understand that storms pass. Yet when money is involved, people forget this lesson. They begin reacting to today's weather instead of focusing on the climate over decades. That single mistake costs more than most people realize. Every time someone jumps in and out of the market because of fear, they risk missing the moments that matter most. And those moments rarely arrive with a warning. The biggest recoveries often begin when confidence is still missing, when the news is still negative, when uncertainty still fills every conversation. By the time everything finally feels safe again, much of the opportunity has already passed. This is why emotional investing creates a painful cycle. Fear pushes people out. Confidence pulls them back in. They sell low. They buy high. Then they wonder why progress feels so slow. But disciplined investors think differently. They understand that uncertainty is not a signal to abandon the journey. It's simply part of the journey. Instead of asking, "How do I avoid uncertainty?" they ask, "How do I keep moving through it?" That shift changes everything. Because staying invested isn't about ignoring reality. It's about trusting a long-term process more than short-term emotions. It means accepting that you won't predict every high. You won't avoid every low, and you don't need to. The goal isn't perfection, the goal is persistence. Over time, persistence allows something extraordinary to happen. Your greatest advantage stops being intelligence, it stops being luck. It becomes endurance, the ability to remain calm while others panic, the ability to keep moving while others freeze, the ability to let time work in your favor instead of fighting against it. But even those who understand this principle can still lose everything to one invisible enemy. An enemy that doesn't live in the market. It lives in the mind. And recognizing it is the breakthrough that separates lasting wealth from lifelong frustration. Chapter 4. How emotional decisions quietly destroy long-term wealth. Imagine you're sitting at a poker table. The cards are on the table, but instead of making your next move based on probability, you let every previous hand control your emotions. One big loss makes you play scared. One lucky win makes you reckless. Before long, you're no longer making decisions. Your emotions are. This is exactly what happens to millions of investors. They believe they're reacting to the market. In reality, they're reacting to their feelings. The market becomes nothing more than a mirror, reflecting fear, greed, regret, and hope. And those emotions are far more dangerous than any market crash. Think about the last time you made an important decision while feeling anxious. Did your world seem smaller? Did every risk feel bigger? Did waiting suddenly feel like the safest option? That's how the brain works. When fear takes over, it doesn't simply change your emotions, it changes your perception. You begin seeing danger where opportunity may exist. Now flip the situation. Imagine the market has been climbing for months. Everyone around you is making money. Friends are sharing profits. Social media is filled with success stories. Suddenly doing nothing feels unbearable. You convince yourself that if you don't invest now, you'll be left behind forever. Notice what happened. The facts didn't force your decision. The crowd did. This is one of the oldest psychological traps. People naturally seek safety in numbers. Thousands of years ago, following the group increased the chances of survival. But in investing, following the crowd often means arriving too late. When fear spreads, the crowd runs. When excitement spreads, the crowd chases. Very few people stop to ask a simple question. Am I making this decision because it's rational or because it's emotional? That single question has the power to save years of costly mistakes. Because emotions are excellent at grabbing your attention, but they're terrible at predicting the future. This is why successful investors don't try to eliminate emotions. That's impossible. Instead, they build systems that protect them from emotional decisions. They create habits that continue working even when confidence disappears. They rely on discipline when motivation fades. Think of an airplane flying through turbulence. The passengers may panic. Some may even believe the plane is falling. But the pilot doesn't fly based on the passengers' emotions. The pilot trusts the instruments. Long-term investors do the same. Headlines create turbulence. Market drops create turbulence. Economic uncertainty creates turbulence. But discipline keeps the course steady. Over time, something remarkable happens. The emotional highs become less tempting. The emotional lows become less frightening. The market doesn't change. You do. And that may be the greatest investment of all, because lasting wealth isn't built by people who never feel fear. It's built by people who refuse to let fear make their decisions. Yet there is one final shift that ties every lesson together. A mindset so simple that many people overlook it. But once you truly understand it, you'll stop asking whether today is the right time to invest. And you'll start thinking in a way that gives time itself the chance to become your greatest financial partner. Chapter 5. The Mindset That Wins While Everyone Else is Waiting. Imagine looking back at your life 20 years from now. The market experienced booms. It experienced crashes. There were recessions, political uncertainty, unexpected world events, and countless headlines predicting disaster. Some people spent those years waiting for the perfect opportunity. Others quietly kept moving. Now ask yourself, which story do you want to be yours? The final lesson has never been about finding the perfect investment. It has always been about becoming the kind of person who can stay committed long enough to let great investments work. That is the difference. The market is unpredictable. Your mindset doesn't have to be. Think about a marathon. No one wins by sprinting the first mile. The winner is usually the person who manages energy, controls emotions, and refuses to quit when the race becomes uncomfortable. Investing is no different. The greatest advantage is rarely speed. It's consistency. The crowd believes success belongs to those who know the future. Reality tells a different story. Success often belongs to those who prepare for a future they cannot predict. That mindset changes everything. You stop asking, what will happen next? Instead, you ask, am I building habits that will still serve me 10, 20, or 30 years from now? Notice how different those questions feel. One is driven by anxiety, the other is driven by purpose, and purpose is far more powerful than prediction. There will always be another reason to wait, another election, another recession, another market correction, another expert claiming that this time is different. If you build your decisions around perfect conditions, you'll spend your life chasing a moment that never arrives. But if you build your decisions around discipline, every year becomes another opportunity for progress. This is the quiet secret behind long-term wealth. It isn't exciting. It doesn't create dramatic headlines. It doesn't promise overnight success. Instead, it asks something much harder. Can you trust a sound process more than your temporary emotions? Can you remain patient while others become impatient? Can you stay focused while the world becomes distracted? Because every great journey eventually reaches a point where results are no longer created by talent. They are created by character. And character is built one decision at a time, one investment at a time, one moment of patience at a time. The people who achieve lasting financial freedom are not those who avoid uncertainty. They are the ones who stop fearing it. They understand that uncertainty is not the enemy. Inaction is. So the next time you catch yourself waiting for the perfect moment, remember this. Time doesn't reward those who wait for certainty. Time rewards those who give it the chance to work. That single idea can change not only the way you invest, but the way you approach every meaningful goal in life. If this perspective challenged the way you think, let me know in the comments. What's one belief about investing that you're leaving behind today? If you found value in this journey, don't forget to like, subscribe, and share this video with someone who's still waiting for the perfect time. Because the greatest opportunities rarely belong to those who wait. They belong to those who begin.